Hi guys, I'm Karunya Rao and in iTest for Profit today we talk about the fundamentals of Marico. The FMCG majors June quarter numbers were in line with estimates. Management says gross margins have bottomed out in Q1 and are likely to recover from September onwards. In the domestic market, Marico witnessed a volume growth of 21% and revenue growth of 35% year-on-year, while in international markets, revenues in constant currency grew by 21% and in reported terms, revenues were up 20% year-on-year. In India operations, general trade and e-commerce bucked the trend with volume growth of 17% with both rural and urban markets growth combined and 61% year-on-year respectively. E-commerce now contributes almost 9% to the total revenue pie. Parachute category, value-added hair oil and Saffola grew by 12%, 34% and 24% in volume terms respectively year-on-year. Saffola edible oil grew in low double digits, while Oats franchise saw value growth of 59% during Q1. Saffola Foods saw 100% plus growth. The foods portfolio is on course to reach 500 crore turnover in FY22 versus 300 crores in FY21. In terms of sales contribution, foods is likely to be only about 3-4%, which is going to see better growth going forward. Despite high competition, Saffola Honey is likely to report revenue of 100 crores this fiscal. Saffola Oodles is scaling up well in modern trade and general trade. After launching Saffola Meal Maker in Eastern India, it was also made available in parts of North India through general trade expansion. The premium personal category, it was reviving gradually with Livon serums as well, now touching pre-COVID levels. As discretionary consumption picks up, we expect low penetration and leadership of categories to drive growth for Marico. In the international markets, Bangladesh, Southeast Asia, South Africa and MENA have seen a growth of 9% for Bangladesh, 16% Southeast Asia, 52% for South Africa and 74% for MENA region in constant currency terms year-on-year. In Bangladesh, non-coconut oil portfolio grew 20% constant currency terms. Copra prices meanwhile were down 13% sequentially in June quarter due to seasonal arrival of coconuts and lower demand. With supply outlook improving, prices are likely to remain range-bound in the near term. On the back of COVID-led disruption and weather anomalies, rice bran oil prices were higher by 68% year-on-year and 28% sequentially. Marico expects prices to remain volatile in the short term with a downward bias in line with global markets. Crude derivatives such as liquid paraffin, HDPE were also up by 50% and 44% year-on-year respectively. Both of them are expected to remain firm in the near term. Marico will continue to maintain a sustained, profitable, volume-led growth by strengthening the franchise in core categories and driving the new engines of growth towards gaining critical mass. The management has guided 13 to 15% revenue growth over the medium term on the back of 8 to 10% domestic volume growth and double-digit constant currency growth in international markets. But if you look at markets like Bangladesh and Vietnam, they've witnessed a resurgence of COVID-19 and there has been some political unrest in South Africa as well, which has affected business in July and could impact the performance of the international business during the September quarter. In the domestic markets, demand trend has improved. Marico expects rural consumption, which moderated because of the second wave of the pandemic, to bounce back. In fact, not only bounce back, but also grow ahead of the urban markets on the back of normal monsoon and government stimulus. Management has indicated that gross margins have bottomed out and will improve sequentially going forward. Progress in the foods business has been commendable with Marico eyeing revenues between 800 to 850 crores by FY24. On the digital-first brand portfolio, which includes the likes of Beardo and Just Herbs, Marico will create another engine for growth where it targets revenues worth 450 to 500 crores by FY24 from the current annual rate of 200 crores. We expect a revenue growth of 15% for FY22 and 12% for FY23. Based on our projections, Marico trades at a PE multiple of 55x and 47x for FY22 and FY23 earnings respectively, as against the last 10-year average valuation of 36x. Investors with a long-term view can accumulate the stock and add on declines. Of course, risk to our rationale is a slowdown or down trading by consumers in the current economic environment.